early afternoon, everyone, depending on where you're calling in across Canada today. So for those of you that are new on the line, thank you very much for attending today's webinar. So a couple of housekeeping tips before I begin. What I typically do is I conduct a presentation, and today's presentation really isn't going to be that long, but I mean, depending on how long, there are for questions afterwards. It's a really, really important webinar because, unsure if everyone is very familiar with this program, but I'll discuss, what the benefits are, what we need, setting those expectations with your clients, and that type of thing. But also, this product does not have a premium on the rate on it either, so it's going to help you definitely maybe as a strategy for 2013. So everyone that's logged into the system, if you've entered in your audio PIN number, what I do at the end of the webinar is you can raise your hand and I can take you off of listen only mode, and then you can ask questions that way, or alternatively, you can ask any questions in the question box. But by all means, everyone, I mean, if you want to have a further discussion with me, definitely let me know. We can talk about, certain scenarios if you wish to, deals that, if you're talking to a client, how should you approach that? Because, the thing with this program, it's going to help you grow your book of business, and that's what MERIX is about, helping you do. Unfortunately, the other side of this is that it's, people are separating, there's emotions attached to this, that type of thing. So I will get started. And then for anyone that wants a copy of this afterwards, let me know. I'll send it out to you, okay? So you'll have that to review. Okay, so first of all, I wanted to just kind of give you some statistics, and this is the divorce rate, and again, I mean, it is an opportunity for you to help these clients, so I just thought it would be kind of interesting to give you some information up front. So on average, divorces in Canada it's about 71,000, okay? Marriages that won't reach their 50th anniversary is 43%. Around the world, interesting enough, Sweden is leading the way with divorces, okay? Then next in line, you've got U.S. and Australia at 46. United Kingdom at 43. You've got Canada at 40%, okay, divorce rate. Israel, 26. So there's quite a jump, actually, from Canada to Israel. Switzerland, 25%. Greece 18%, Singapore, Poland 17%, Spain at 15%, and the lowest is actually Italy, okay, which is quite interesting. So the highest in Canada, though, is actually Newfoundland and Labrador, okay, at 54.3%, okay. So again, you look at it as a way to help your clients in the future, and then, I'll explain how that works. Marriage rate in Quebec, divorce rate is 37.5%, okay? And of course, I mean, I'm not surprised that, month highest separations is January, okay? So what is this program about? Well, you have couples separating, and the most important part is their matrimonial home and that division of assets, okay? So there's a lot of emotions going on, and, it's just they really want to get it done quickly. It could be different types of situations as to why they're separating. But again, something to really note. I mean, we all know you're going to have a very high emotions going on. And we know with the new mortgage rules that the person that's going to be staying in the matrimonial home cannot refinance over 80% anymore, right, to take out equity, to pay out their partner. So what do you do, right? I mean, you're capped at 80% as a refinance. Some people just don't have, enough equity, right, that's going to pay out their partner at 80%. So what do you do in that case? So what the insurers have come out with as of the latter part of last year was a program, okay, the Spousal Separation Program, which is letting one client purchase from another up to 95% loan to value. Okay, so you're actually allowing one client to purchase, one spouse to purchase from another spouse up to 95% loan to value. Okay, and and it's allowing them to pay out and take out the equity to pay out the other. Okay, who is leaving the home. So it's really giving them a great opportunity, to take out additional equity to divide matrimonial home. Okay. So how does that work? Well, two parties, okay, so they have to be married. They have to be legally married is what I'm going to start off with. So it can't be a common law situation, and they both have to be on title of the property, okay, very, very important. What kind of guidelines? Well, I mean, as I've mentioned to you, they'll allow you to purchase up to 95% loan to value from one spouse to another. So what do we need in this case, right? So when you're sitting with your client, what kind of expectations do you want to set? Well, finalized separation agreement, definitely a must. We have to have that on file, okay? And offer to purchase, all right? So a purchase and sale agreement. And the reason why we need to have that, we just need to have that on file. The sellers are actually going to be both that are on title, and then the purchaser is going to be the spouse that's going to be staying in the home, okay? And because this is a non-arm's length transaction, we will need to have a full appraisal, okay? The appraisal is the cost to the client. But on the other hand, everyone, I mean, they are permitted to take out extra equity out of the home, to pay out the spouse, to stay in the home. So just setting those expectations up front with them will really help. Okay, so I have an example here, okay? So Mary and Fred are separating, and Mary is the one that wants to stay in the matrimonial home, okay? So the home is valued at $300,000, and the current mortgage is $200,000, okay? So the separation agreement is going to show the 50-50 division of assets of the matrimonial home, okay? And this means obviously that Fred is going to get $50,000, okay? So that means now the new MERIX mortgage is going to be $250,000 at 83% loan to value, okay? Again, required documents, separation agreement, private purchase agreement, so purchase and sale, current mortgage statement, appraisal, and of course Mary's income, okay? So what has been changed, and it's not really a change, but what has been revised and what's new since we've brought out and introduced this product out to everyone through Genworth and CMHC, okay? Because it's like anything new, you offer this product, so what are we running into, and what is the criteria? So what I'm going to tell you is the separation agreement, okay? That is a very, very important part of this, okay? So when you're having that discussion with these clients, it's a great opportunity, as I said, but when you're having, this discussion with the clients, it's very important that the separation agreement only shows the division of assets pertaining to the matrimonial home. So if it's 50-50, okay? No other debts and debt payouts can be added onto that separation agreement. That will have to be a side agreement between them. And here's the reason, okay? Because you're probably all thinking, well, how's that going to work? And, it's not going to work well and that type of thing. But if you think about it this way, everyone, okay, the only other option for these clients is really to refinance up to 80% loan to value, okay? And we know with the government rules and the changes that they've made that we're capped at 80%. That's it. They just will not allow you to refinance and take out additional equity, okay? Because the insurers are actually allowing clients in this situation, up to 95% loan to value. So now you're looking at 15% more loan to value than on a refinance. Because of that, it's not an equity takeout to pay out debt. Okay? So just keep that in mind. And I think explaining it that way, and again, if anyone is confused with that and needs clarification, let me know. Very, very important to understand that, but that is the reason, okay? Because this isn't to get, you know, a way to refinance, to take out more equity to pay out debt between the two parties. This pertains only to the matrimonial home only. Okay, because if that's the case and we see the separation agreement and it comes in and it's saying, you know, debt payout, this, that, we need a new one or they won't proceed. Okay, that is the only part about this, and the reason why I'm conducting this webinar again, because that is our update to everyone that we found that we were running into. And it's a very important part, but it is something that if you know ahead of time and you're sitting with the clients and explaining that, in advance, then it's not going to fall through at the end, right, with the document coming in. So, but again, you know, I will tell you, this is such a great opportunity for those of you that, you know, have solicitor referrals, you know, that you're dealing with on a daily basis. Talk to them about this, right? Talk to them about this because, you know, it's a part of life. As I went through the statistics in the beginning, it does happen. It's there. You know, help these clients. Looking at it as an opportunity to help these clients take out more equity, and especially, you know, because at that time, I mean, a lot of them are emotional, and this will definitely help them and maybe relieve some of that anxiety that they have because, you know, capped at 80% as a refinance for equity. This just kind of opens up the door a little bit more for them. So just to quickly recap, though, what we need, okay, purchase and sale, up to 95% loan to value, okay. Separation agreement must only state the division of assets pertaining to the matrimonial home. And an appraisal, okay, definitely we'll need to have that. And the best part about this, everyone, is that not only are you going to be helping these clients, you're going to be increasing your portfolio. The referrals that you're going to get after you help these clients, I'm sure, is going to be large. Great opportunity for you. And then there's no premium on the rate for this either. Okay, so if you haven't looked at this product before, definitely think about doing that. Talk to your solicitor referrals and get the word out there. And it's definitely something that you can help everyone with. Okay, so again, it's not a really long webinar. I did schedule it a little bit longer than I should have, so my apologies for that. But again, it's a really important piece of the puzzle for you to help you grow your